Good morning and welcome to this weekly market update from AGM Markets. What we're doing today is going through technical analysis on Euro Dollar, Cable, Dollar Yen, Dollar Swiss and Gold. For any new followers, we'll not be making any sort of trade calls or recommendations. You trade at your own risk. Please read our full disclaimer at www.agmmarkets.com. On each of these charts we have 3 moving averages. The red one is the 55 simple, purple is 100 simple, and the gold is 200 simple moving average. Okay, let's have a look at the Euro Dollar chart. This is the daily chart. The weekly is not much of interest to me currently. In terms, let's have a look at the 4 hour. 4 hour is quite an interesting chart. So what do we have? Last week we had this kind of downtrend resistance here. Sorry, bear with me a sec. I should thicken this line, change the colour so you can see a bit more clearer. So as you can see, we had a downtrend resistance line kind of playing out there. That's now got broken, and then you could see that on. Let's draw an arrow for you. That on that arrow there, you can see. Sorry, not that candle there. That candle there, you can see we basically broke the trend line. Then we came down, we tested it, and the trend line then acted as support. So we're now well and truly above this trend line. So the bias has kind of been towards the upside ever since we broke that trend line. Another thing that I definitely focus on. It's the 4 hour charts. This is good for kind of weekly sort of outlook. What the levels I'll be looking at for the next few days or so. This fib here from the low to the high. You can see we had a nice reaction at the 50% Fibonacci retracement. You can see in this fib I've taken off for 23.6 and the 38.2. Basically because they're not my favourite fib levels. I prefer to have a kind of bigger retracement. There's nothing wrong with those fib levels at all. Plenty of people use them, plenty of people make money off them. Nothing wrong with that at all. I just prefer the 50 and the 61.8. As you can see here, so when we draw it from that low to the high, we can see we had a lovely sort of 4 hour candle here, which also is closed above the 55 bar moving average as well. So it's a nice sort of I mean, it isn't quite a hammer because the candlestick body is red, but the shape of the candlestick is very bullish. And you can see we're starting to get some sort of bullish momentum off of this fib already, but we are being capped by this 100 bar moving average on this 4 hour chart. So if we get any sort of further momentum to the upside, then we need a break above that 100 bar moving average, and then we'll be looking to take out those highs at the 0%. So I'm just going to draw the levels on, sorry, the prices on these levels. It'll take 2 seconds. This is a little shortcut trick actually. If any of you don't know how to draw the prices on your Fibonacci levels, what you do is you double click here, space, dash, space, and then percentage mark and dollar mark. Press OK. And then then the price levels come up next to Fibonacci levels. So that's a little trick there for you. So yeah, if we're going to get any sort of momentum above this in this move, then we need to break these highs at the 0% line, which is at one spot 26.45. So yeah, I mean, well, in terms of that in terms of the daily, we're still miles away from the moving averages. So the odds are that that we'll get some sort of pullback. It's looking like we're getting a pullback at the minute. And you still got to keep your eye on that 55-day moving average really. So that's the kind of key moving average I'm looking at for on the daily chart, but we're still a long way away from that yet. So I mean, just keep it to look on the shorter term chart. So the weekly, yeah, as I say, has got nothing much of interest for me there. It's all about the shorter sort of term charts, and also you got another sort of trend line you can look at here on this 4 hour chart. We haven't had a candlestick close below that trend line yet. It's playing out quite nicely. And that's also another sort of reason why that sort of, when that fib level there, that hammer, that was a great sort of buying opportunity, because there's a lot of confluence zones there. You had the 50% fib retracement, you had the trendline support, and the 55 bar moving average. So quite an interesting chart on Euro, very technical chart indeed. Sorry for those noises there, it's just the news popping up on the terminal. So yeah, let's have a look at cable. This is the cable daily chart. What we've been speaking about last sort of few weeks was this nice support level here. I'll just make this line slightly thicker for you. So you can see it's sort of one sort of 52.90s. We failed to have a daily candlestick close multiple times. You look once there, and you've looked slightly to the left there. Failed to have daily candlestick close below that, and this is what happened last week. We had a candle pierce this level, and then come back up and close above it, and we're now starting to get some bullish momentum to the upside. And the first sort of target on this daily chart really is the 200-day moving average. If we bring up the Fibonacci retracements from this, if any of people are looking to short it, and if you're looking for some sort of resistance level, if you draw the fib from this high here down to the low, the 50% level, which is the healthiest sort of retracement, comes in at one spot 57. 77. That kind of coincides with the 200-day moving average as well. So if the price does come up, then the moving average will turn up. So would not be surprised if we came up and test that 50% level and that 200-day moving average conference level at around the one sort of 57.70s there. So that's definitely an interesting level to look out for on cable. But I mean, it's been a very technical chart, the cable daily chart and the weekly. You can see it much clearer on the weekly, that support level, how well it's been holding, and on the daily you can see it nice and clear as well. So for me, in terms of longer term perspective on these daily and weekly charts, I'm still very bullish on cable. Really have to, because it's been acting so technically. In terms of a shorter term chart, quite similar to Euro really, where we've had a nice trendline support which has been holding very well indeed. So I mean, any sort of dip buyers out there will definitely be buying, I mean already have been buying off this off the trendline support. So any sort of further dip, would not be surprised to see people buying off of this lovely trendline support. It's been playing out very nice on cable, very technical indeed. Okay, let's have a look at dollar yen. What do we have on dollar yen? We spoke about it last sort of couple of weeks. This trendline resistance, which is now looks like it's been broken. It's well and truly broken. So in terms of the moving averages, we're above the 200-day. The first level of resistance is this 55-day moving average at the 80.05 level. In terms of if we do get a further bounce up, sort of healthy level to look out for a selling opportunity would be the 50% Fibonacci retracement, which comes in at 80.88, and then the 61.8 comes in at 81.65. But nothing massively of interest to me really. I think there's more interesting charts out there, like Euro and cable, much more interesting, much more technical in my opinion. Let's have a look at dollar Swiss, which has been doing quite an opposite thing to euro dollar really, especially in shorter term charts, the 1 hour, 4 hour, etc. Been doing a very sort of complete opposite sort of thing really. Also, you notice we see these big gaps in the charts. This is the Sunday night gap when the Spanish bailout, 100 billion euros bailout was decided over the weekend. We've got a big sort of 100 pip gap, which then got filled straight away, as you can see yesterday. Very technical indeed. Gaps do tend to fill, and that one filled within the day, so that was a nice technical play out there. A lot of people have been trading that. Similar to Euro and K, where we've got a trendline support. What I said, the dollar Swiss has been doing the opposite thing, and surprise, we have a trendline resistance up on our charts here. So, if you're looking to play dollar Swiss in the week, we'll be looking at that trendline resistance for any sort of selling opportunities. But the sort of recent fib move, I don't think it will come down and test the 50%. So this fib will work. So bear in mind, my computer's been a bit slow. Bear me 2 seconds. So you can see from this recent fib here, it hasn't quite come down to the 50%, but we are getting a nice bit of support. If you look at the 1 hour chart off of this 55 bar moving average here, you can see around this sort of level here, where it stands at 0.9592. We're getting a nice bit of support. We just had a 1 hour hammer there, so a lot of people will most probably be buying with stops below lows, looking for a kind of trendline resistance break, because then it really could pop up, but most probably the sellers will still be coming in if we do test that trendline resistance. But in terms of throughout the week, over the next couple of days, that's the key level really is. The key sort of indicator is that trendline resistance. What happens at that level? We've already had sellers coming in twice there in today and yesterday, significantly come in and sell that pair, so I would not be surprised if it continued to do that today. Okay, that's the Forex done. Let's have a look at everyone's favourite commodity, gold. It's the daily chart on gold. I spoke about it multiple times in the weekly. You can see that clear sort of support there. I think it's around the 1560s level. You can see, so let's have a look on the, let's put it on the daily actually, it's a bit clearer. On the daily, if you take it from the lowest candlestick, which failed to close below, then it's around that sort of 1542 level. We spoke about it last week. Held very, very nicely. We're now starting to pop up, but we are being currently capped at the 55-day moving average. So, I mean, look, not yesterday's well, if you look at Friday's candle, very, very bullish candle. Kind of like some people call it a hammer, some people call it a dragonfly doji, but it's got a long lower wick on it. Where the buyers, where the sellers pushed that price down, and then the buyers came back in and bought it back up. So if you're going to get any sort of bullish momentum on gold, then we need to get above this 55-day moving average for definite. But it's quite a contrarian play really, because a lot of sort of the fundamental players have been quite bearish on gold, but I think it's quite a good contrarian play to the upside if you're a longer term speculator. Especially all the eurozone stuff on at the minute, it's always going to be, people are always going to be buying it as a safe haven and an inflation hedge, just in case Mr. Bernanke fancies pumping in any more money into the system, printing any more dollars. It really does. It really is very, very bullish for gold. So a lot of people are still holding gold, and it does look bullish towards the upside, definitely in terms of that technicals. Amount of times we've pierced below this sort of 1540 level and then come back up, it's still very, very bullish in my opinion. Okay, that's done for the charts. Let's have a look at quick at the Forex calendar and see what we've got coming out for the rest of the week. Today and yesterday have been quite quiet days in terms of news. Today at 9:30 AM UK time, we did have the UK manufacturing production numbers month on month, which were forecasted to be flat at 0%. They came in as slightly worse at minus 0.7%. Nothing else really for the rest of the day. Tomorrow the big sort of news, we have some US data, we have retail sales and PPI. We have some New Zealand data overnight if any of you trade Kiwi. On Thursday we have some Swissy news out 8:30 UK time with the LIBOR rate and some S&B stuff there, press conference, etc. We also have some more US data at 1:30. We have CPI month-to-month core CPI and the weekly jobless claims. And on Friday we have some Japanese data overnight, and at 2:55 to round off the week of this quiet economic data week, we have preliminary University of Michigan consumer sentiment, which is forecast at 77.5, previously was 79.3. Okay, that's all for today. I hope you enjoyed that webinar. Take care, and I'll catch you next week. Thank you very much.